Welcome back to Insurance Mantra. Joining me now is Dr. Joydeep Roy, former PwC Global Head, Insurance Practice Leader and Financial Service Advisory Leader for India. And don't forget, you can also send us your insurance-related queries on our WhatsApp number 70456168848. So thank you so much, sir, for joining our Insurance Mantra. Just want to start now GST reduction announcement has happened, and from most of the queries I am getting, and I have done some ground checks also, senior citizens are most impacted due to increase in health insurance premium. Many senior citizens I have met, they said we have given up our policy because we cannot afford that much of insurance premium. So do you think that this GST reduction will solve the problem for senior citizens and public at large, or according to you, what more need to be done?
Thank you, Anurag, and thanks. And it's a pleasure to be answering questions which are very important because people often get confused with insurance and its terms and facets. And we need people to wholeheartedly go and insure. See, the issue about senior citizen insurance, and people are living longer than ever before, aided by advanced medical treatments and better living conditions and prosperity. However, as one gets older, near 85, then the probability of going to the hospital increases so much, it almost becomes a certainty. And therefore, the premium goes up dramatically. To sometimes, let's say, for a 10 lakh rupees sum insured, premium becomes 3 lakh rupees, 4 lakh rupees. Now, that becomes a burden.
That was one of a senior citizen. I was in a joggers park. I asked him why you have given up your policy. He just said, every year I'm paying more than 1 lakh rupees. I'll put this money in a fixed deposit, and whenever required, I'll use it. Why to pay bills of insurance company on me? I don't want to.
The trouble is he can only pay once.
Yes.
Insurance company will pay every time, every year. So if he keeps giving the premium, that 10 lakh rupees, which he can build up a corpus, but insurance company will pay every year. Here, he can build up a corpus. One incident, it will get wiped off. Yes. So, insurance is required. However, it is of course difficult to pay 4 lakh rupees for a 10 lakh policy or a 2 lakh rupees for. Therefore, there have to be other solutions. For a senior citizens, we have to think of a whole gamut of solutions. It has to begin early, no doubt. Any financial planning, as you know, it has to begin early. But it has to be a combination of own savings. There has to be something called a health savings policy, which needs to be both regulatorily approved and promoted. And all companies should. Health savings is something which builds savings over time for health reasons. The morbidity cost will keep coming down. So premiums will not go up higher.
Okay.
But there's a corpus also being built, not just a term kind of health policy. Second thing is reverse mortgage has to be really promoted in our country, where people have, say, a home somewhere in the country, and that home can be a great source of income, as well as savings, as well as contingency funds. If people go for reverse mortgage product from the banking industry, it is there, but nobody wants to do it because they want to leave it to the next generation. Okay. Third is obviously insurance has to be seen, where if specific illnesses can be covered more, and the thing is narrowed to an extent, I think the premium will keep coming down. And of course, keeping fit, like the Joggers Park example is great. If people are keeping fit, they should be really classified basis their actual health, and not because of an age, just because of an age.
Okay. And so one more question I want to ask, how OPD insurance can be successful in India? Because that product is there, but there are very few takers.
That's true. So first of all, it's very difficult to do OPD insurance because of the behavior of the customer with medicine shops, doctors and pathology clinics and all of that. It is not still very organized. People go and do one test, they might do another test, prescriptions, managing all of that. So some companies are trying to make it all through a network. It has to be network-based, it has to be preferred provider, network-based and cashless, ideally. But the premium so far, because of this uncertainty of utilization, premium has been high.
Okay.
It is sometimes looks low. Say if somebody says spend so much per week or so much per month, but it is not really low. But GST should give a fillip because that's a very decent amount. reduction. Most of it is sold online, which means there's no commission. So offset of input tax credit also will
Because
be
all
much less.
aware people only go for OPD
And the
insurance.
ITC, the input tax credit here must, the burden of the input tax credit should be much lesser because the services provided and the commissions and all that are much, much lower. So this should be somewhere where there should be great fillip in the.
Okay, one more question I want to ask, sir. The use and efficiency of life insurance means now people are shifted toward completely mutual fund. That what used to be, they used to buy life insurance. Now everybody want to have only term insurance. So according to you, do you really think other than term insurance, in life insurance, we need something?
Yes. So with the regulations as they have evolved over the last decade, the charges on life insurance savings policies, especially let's say unit-linked ones, have gone down dramatically.
Okay.
Today they are comparable or even better than mutual fund charges. So if one has to see end of the day, everybody gets confused by every financial product except probably bank fixed deposit. Therefore, people get confused of investments, mutual funds, whether capital will go down. Is it a debt fund looks safe, but then with interest rate hike it goes down.
That's why they don't invest only. They don't start.
Our retail investment is one of the lowest in the world. But if we want people to participate in stock market, bond market, insurance-linked product is so good because it insures against the possibility of somebody not being able to save and dying or getting morbidly ill if before they complete their savings for the goals that they have set out for, be it education, retirement or whatever. And the costs and the charges being low, today taking a unit-linked plan, whichever base product might be, is far, far more cost effective and people must factor it in their financial plans.
Okay, sir. One more I want to understand about how in a global arena that caregiving insurance works, means what is the new concept because it's not much familiar in India.
It's not. Just because the underlying institutions don't exist much. There are a few, but very few, which are called hospices, which are where people go for caregiving. It's not for great amount of treatment, but more of care. So, insurance, there are 3 risks. One is dying too early, for which you buy term life insurance. There are things about health, and we've talked about health insurance, how important it is. The third is living too long, for which you need financial insurance, which is pension, which goes on till the end of life, or you need to take care of a situation where somebody has to be taken care for a very long time. Now, there are many geriatric, those organizations coming up, very high-class old age homes are coming up, but there's no insurance to cover the cost. For hospices and that, there has to be thought in this, because with the incidence of more chronic diseases, chronic care, even things which will dementia, Parkinson's, where people are not able to take care of themselves and their families can't, or they live away in a nuclear family.
I have one question also of Mr. Sunil Kumar.
Yes.
Sir, chronic disease patient के लिए कोई policy है क्या, such as cancer, etc. Please ask this question to in Insurance Mantra.
So cancer is not really a great example of chronic disease. Cancer happens, and then it happens suddenly, and then it's a mutation of our own cells. Chronic disease today, if we have to think about it, it's kidney disease or liver or diabetes, where you have to have a long-term treatment. In a kidney disease, you know that you have to keep treating, you have dialysis for next 30 years. You might live. It is very difficult to have a policy for that, just for that, because it will never pay back, unless you already have a policy. So first of all, people need to take policies when they're healthy, as soon as they think about it, not procrastinate. But having had these things, there won't be an insurance specific to that, but there can be care around it, the other systems around it, the care piece, the nursing piece, the whole surrounds of that, including housing in an old age environment. All of that can happen if properly analyzed, implemented, and priced. It does exist in many parts of the world.
Okay, and so in India, it's started or yet to start?
So the insurance is not started. See, like for health insurance, there has to be hospitals. Similarly, for say chronic or old age care, you need to have the hospices and the old age care things.
Okay.
There is a lot of funding which has flowed in. A lot of companies are doing it. A lot of startups are starting that. But it has to go on at 100x pace because of the plight of all other old people which are there who get treated for a very long time.
Okay, so I have one more question of Mr. Vijay. he want to understand, he has written that what is super top up, and it is important to go for super top up instead of a normal policy.
So first of all, super top-ups were introduced about 12, 13 years back, and they were meant to cover or increase your sum insured. So if you have a 5 lakh policy, you increase the cover to 30 lakhs. The first 5 lakh to be taken care of by the first company, and the second company takes care. But understand, in a country where the average severity of a claim in the year is about 1.5 to 2.5 lakhs, the probability of 5 to 25 and 50 is low. It happens for some people. For them, it is greatly beneficial. It is important that people think of the fact that insurance is to be used when I can't take care of it. So if I can take care of 1 or 2 lakhs, why should I insure that? I should take a super top up, keeping 2 lakhs vacant, and then take the cover up to 50 lakhs or 1 crore. The premium goes down dramatically. And people will be surprised that the cost of a 1 crore policy will feel like a cost of a 8 lakh policy if you just keep 1, 2, 3, 4 lakhs as a
So it's advisable
deductible.
to go for higher sum insured policy.
As higher sum insured as possible, because when you want it, you don't get it. When you get it, that's the time you should take it.
Okay.
But you should take as much as possible. Lock it in, because the medical cost inflation is rising at such a rapid rate. The room cost, which is 10,000 today, might cost 1 lakh 15 years later, and that's when you might need your insurance. So I'd suggest everybody to take as high as possible, but to economize the premium, one can take a deductible 1 or 2 lakhs, which will be nothing in the next 10 years. The value of money is reducing dramatically.
Okay, sir. My final question, sir, what's your view on bank assurance channel and agency channel? Among two, which will you prefer more?
No, so I think both have their great place, because banks in India, for example, are very trusted. There are some countries where banks are not trusted. I'd not like to speak about that, but in most advanced countries, banks are a very trusted institution, and because they follow the rules, they're governed well, they're regulated very well, you expect trusted advice. So products which are simple, products which are easily understood, simple health insurance, simple term insurance, simple savings insurance, pension, where the bank and the banker, the bank insurance person can explain very well, because they are accustomed to talking about investments and for the future. It's a great channel for people who are banked. And most people today are banked. It's just that people use banks lesser. For products which require a lot of planning, like combination of 2 or 3 products, where one product after maturity starts giving some dividends, which will pay for the premium in the advanced stages when you are retired, figuring out retirement age and multiple family members, even the children or extended family. For that, you need a financial consultant. Now, the financial consultant should be somebody who can offer. Now, we can call them an agent or an advisor or IFA, whatever we may call it. You require someone to sit with you for many days, many hours, talk to your relatives, talk to your family,
so both
and give
have
you a solution.
Important place.
Absolutely. For transactional, quick fire, taking a simple insurance, which is just to start, I think bank insurance is extremely good, very trusted, easy access. One needs an agent to do financial planning for the future.
Thank you so much, Joydeep sir, for giving your insight, taking our viewers' query and your views, because you've been in all over the world, you know what is happening around. Thank you so much for joining our Insurance
My pleasure,
Mantra.
Anurag, always.
So that's a wrap on this week's Insurance Mantra. But before we go, here is our Do You Know Insurance Basic. The government announced GST exemption on term insurance, ULIP, endowment, family floater, health and senior citizen plans, while insurer may face challenges with the loss of input tax credit, which could lead to some premium adjustment in future for life and health insurance. But life insurance policy holders, especially term insurance buyers, stand to gain immediately. For example, you bought a term insurance policy of 1 crore with an annual premium of 23,600 yearly. You paid extra 18% GST, that is 3,600. Now with GST exemption, you will save this full amount here every year for years to come. So choose part, stay protected. That is our insurance mantra.